Thank you for joining the live stream, Manny. Thank you so much. I really appreciate you. Thank you for joining the live stream. Right, we are right now on the YouTube. We are live on YouTube. And then I'm going to send a link to access the live stream on YouTube right now. Right? Good. So I'm going to paste the link. As you all know, you can make a suggestion of any asset you want us to treat in the live stream. And then we go through together. Right? So I'm copying the link to the live stream on YouTube right now so you guys can get access to the live stream. That is, if you want to have a high definition view of this live stream, all you need to do right now is to check my Telegram group so that you can get the link to view this live stream on YouTube. Welcome, Manny, you're welcome. Team Ade, you're welcome. Thank you guys. Thank you for joining me right here today. So we are live right now on YouTube. We are also live right now on TikTok. Thank you guys. It's a beautiful Monday morning, and it's 16th of November 2023. Today is Thursday. As you all know, there are a lot of potential trade setup which do come up on Thursdays. There are a lot of trades which do come up on Tuesday, Wednesday, Thursday. These are the busiest days of the market trading activity. Tuesday, Wednesday, and Thursday. As you all know, guys, if you are watching from YouTube, you can always use the check the description of this live stream to get access to the Telegram group, right? If you need help with your trading, if you want to improve in your trading skills, all you need to do right now is to be under the mentorship of a transparent mentor, right? So check the description of this live stream on YouTube and get access to my Telegram group through the Telegram link in the description of this live stream, right? And then if you are watching from TikTok family, follow the instruction right here on this whiteboard right here, and click on the link on my bio to get access to my Telegram group. Thank you for doing that. As you all know, we are not going to take much of our time in this live stream today. We are going to go straight to the point, straight to the information, right? No story today. So I want you guys to start dropping your suggestion, any asset you want us to analyze in this live stream right now. Start dropping your suggestions, and please like this live stream, share the live stream, put a comment down, right? Your comments are welcome. Like, share, right? Share this live stream with your friends, right? So in order to take advantage of this live stream, please make sure you drop your suggestion of any asset you want us to analyze in this live stream, right? So the first trader right here on TikTok is Arovik. Arovik has the first suggestion right here. So Arovik made a suggestion, made a request for GBP USD and the Australian dollar paired against the USD. So that is the two currency pairs we have right now. So guys, submit your suggestions. If you are a trader in the market, submit your suggestion, right? So let's go quickly through the market of the GBP paired against the USD and the Australian dollar paired against the USD, right? So let's go through right here on the day chart, and right, we have the GBP paired against the USD on the day chart. This is what we have on the day chart. I told you yesterday, the live stream, I said we need to start focusing our attention. The key level structure, we got a lot key level structure right here. Apart from the Fibonacci true we got in this market, we got a key level structure that is a high right here. You can see in this downtrend, we got a series of a high. This is a low high swing. We got a higher high swing right here. Price broke this high swing. And I told you guys yesterday in the live stream, if you were in the live stream yesterday, I told you guys we need to start looking out for a pullback into this medium right here, based on the previous higher high swing, which was being broken at the price of the 1,002. That is 1.23836. You can see that I said we should look out for a pullback, and if we have a strong technical bullish signal right here, this could constitute more reasons for the buyers to set in this market. Unfortunately, right now we haven't yet seen any strong technical momentum, bullish candlestick right here at the Fibonacci retracement level of the 0.382. So we are still doing nothing. We are doing nothing right here. So I have my hands crossed on this currency pairs, and I am patiently wait for the right time to strike like a sniper, right? So currently right now there isn't any action right here. So the next key level I'm watching out for on GBP paired against the USD is the next key level structure which acts at the price of the 1.23105. So this is a major key level structure, and then I kind of have a strong belief price could make a retracement to this level structure right here. So let's see how far price can retrace. If price can retrace to this level of the 1.23117, then this level could interest more bullish momentum on the price of the GBP paired against the USD, right? Based on what we have in this market. First, let's get all these drawings off right here on this chart. So I'm gonna clean it off right here. So let's check out what we had right here on this chart. Right from the swing, right from the swing. Okay, I think I need to zoom a little. Okay, let's zoom out a little bit so that you guys can see this chart properly, right? Okay, we are okay, we are good to go right now. So we got a key level structure right here from the level of the June. We fired it all the way up to the right side of the chart. You can see we had a strong key level structure right here. We got a support structure right here. I'm gonna change this color right here to something different. Let's use like a green color right here. Right here we got a support structure. Okay, we need to get this note to be more bold. Let's get it to be more bold. Right here we got a support for price. You can see the bullish aggressive rally on the uptrend. Price broke this structure right here, and that was at the ending of September 2023. Price retested this level once again. That was at the midpoint of October. You can see that, and the price broke this level. That was in the month of November. This is the month we are presently in right now. Price broke right here. So let's see if this level is going to act as a potential support for price. So I am having a strong belief in this level could act as a point of support. And I told you guys, for those of you who like to trade the psychological level in the market, this level aligns to the psychological level of the 1.23000. So this is a rounded figure, 1.23 level, 1.2300. So this is a cycle level we got right here. So this cycle level right here, I'm gonna clean this off so that you can see the cycle level. So this cycle level right here is another confluence factor which could interest a lot of buyers to put a lot of money in this market right here. So we got a support right here. We got a broken support right here. Once the support is broken, it turns to a new resistance structure. We got a resistance right here. This resistance wasn't broken right here, but price tried to breach this level, but it still acted as a resistance structure. Right now, we could have a potential support structure right here. So I'm gonna change the color right here. Let's change the color right here. So let's get it off, and then let's use like something like a different color so that you guys can see. Let's use like a blue color right here. Okay, let's use like a blue color right here. So at this medium right, okay, no, this color is not right. Let me switch another color right here. Okay, this structure right here, if we can see a bullish sentiment at this structure right here, so this level has a lot of reasons to act as a potential support for price. Okay, so this is what I'm looking out for. And then if you should apply your Fibonacci retracement tool on this price actions right here, you're gonna see we have a nice clean zones for price. So let's get this off right here. Right from the last higher low swing right here, we got a high low swing right here, and then we got a double bottom structure right here. This was the first bottom one right here. We got a bottom one that was at the first point of the month of October, and then at the first point of November right here, we got a bottom two right here. You can see the bottom two right here. So the next swings in this market was a higher low swing, which resulted into a strong bullish aggressive sentiment. You can see that. So these are confluence factors which could interest more buyers in this node, in this price actions right here. So let's get off all these trends right here and I'll try to apply our Fibonacci retracement tool. Right, let's get all the drawings back right here. So based on the last higher low structure right here, if we should apply our Fibonacci retracement tool from this swing right here to the present high in this market, you're gonna see this level structure, which I pointed out as a major structure, which could act as a support structure, aligns perfectly to the Fibonacci retracement tool of the 0.618. You can see that on your price chart right here. You can see that it aligns perfectly to the 0.618. So this is one of the reasons I think this level could be a level to interest more buyers. So this is the levels I'm looking out for trade opportunities in the market. So whenever I see price getting to this level, the final step is to look out for strong momentum right here. I want to see huge volume, obvious volume, right here. I want to see strong technical price action signals right here, and then I'm going to blend it up with other technical factors on the lower time frame, such as your chart pattern, your double bottom, your inverted edge, your whatever you call them, on the lower time frame. So this is what I'm looking out for. And I said there's a lot of liquidity right here. Okay, so based on the day chart right here, this is a liquidity level. You can see the strong volume of bull candle right here. You can see the strong bearish candle right here. So this level right here is a liquidity level, liquidity structure, right? This is a liquidity structure right here. So there's a lot of confluence factors right there. So this is why I am hoping price would find a rejection at this price level of the 1.23105. So in summary, pay attention, take note of the support structure of the 1.23105 on the British pound sterling paid against the USD, right? Now let's proceed further to the Australian dollar paid against the USD. On Australian dollar paid against the USD, I told you guys yesterday, I said there is a potential resistance structure which acts above. And then if you want to be looking out for a buy setup right here, it's highly risky. You shouldn't be doing that as a resistance structure. And then yesterday bar resulted into a doji candlestick. And you know, whenever a doji candlestick forms on the trading chart, it's a signal of indecision in the market. It means neither the bulls or the bears are dominating or winning in the market, right? So it means the market is confused. So as a trader, your obligation as a technical price action trader is to wait for the market to open up to decide which direction it's going to break up to. Maybe it's going to break to the upside or to the downside. But technically, whenever you see a doji candlestick at a resistance structure in the market, there's a lot of higher possibility the bears are going to win the battle right here, right? Because resistance structure tends to attract more sellers in the market, right? So this is where a lot of sellers have a lot of sell limit order, sell stop orders, a lot of sell market orders, right? So this is what I'm looking out for right now. So the next thing you have to look out for is the volume structure right there, in the equilibrium of volume and the momentum right there. So we had a strong bullish candlestick right here, and this is why you got to be very careful if you want to chart this bullish candlestick right here. So let's check on the forward chart. Based on the forward chart, before you're going to be looking out for a short entry on the Australian dollar paid against the USD, it is advisable you see more confluence factors right here. Confluence factors like bearish chart patterns, like increase in bearish momentum. These are the signals you should look out for on the lower time frame, like your 4-hour chart and your 1-hour chart. So as you can see on the 1-hour chart, we have a pattern which looks like a rounded up. We could call this right here as double tops. If you call this a double top, it is welcome. This is what we add right here. I can see right here as a rounded top. And I swear, if you prefer to have it as a double top, then it could be you are trying to read these swings right here as the first top and the second swing right here as the second top, right? So this is a pushback to these swings we add right here. We can tag this right here as the swing 2. And the right here, we tag it as a swing 1. You can see that. So we have a pushback into swing 2. And currently right now, price is finding a rejection to the downside, which is a signal of an imminent bearish breakout to occur on this currency pair right here, right? So I'm going to delete this. So you can see that we got a doji candlestick which pushed back into what we call a bearish, we call this bars right here. These 3 bars we got right here is what we call the 3 black crows. This is the 3 black crows right here. So the 3 black crows right here broke the neckline of this rounded top or double top, whatever you want to call it. So the 3 black crows candlestick right here broke this neckline, and the price is making another pullback in this structure right here. So if you are a scalper or a day trader, this could be a nice trade entry for you. So if you could see a strong bearish close of price right here, you could risk low amount of money. Don't get in with all your position size, because if you try to get in with a lot of position size right here, it means you are putting all your risk at once. You never know which way the direction of the market. No one's know the exact direction of the market right now, right? Because the market structure in this on this 1 hour chart or the 4 hour chart is yet to be proven to be destroyed. We haven't seen any destruction of market structure right here, right? There isn't any signal of a destruction of a market structure right here. So what you need to do if you want to go short based on the 1 hour chart right there is you get in with a small position size, you reduce your position, you break your positions into smaller size. So if you want to get in with a $1,000 initial position right here, then it's advisable you divide it into 5 places. So you could get in right here maybe at the $200 right here, and then when the price keeps on breaking all the way down, giving you a formation of a low high swings and a lower low swings, then you keep on adding to your position size. You could add more 200 right here. As the price keeps going down, you keep on adding. So this is my personal opinions, and this is not an investment advice. So make sure you compare or you analyze or compare my analysis with your trading plans and strategy. If it conforms to your plans, your ideology, then you could look out for a trade opportunity right there. And then take note, there isn't any trading strategy which is infallible to the market. So make sure you understand the risk involved in trading, right? Great. So I am not a scalper. Most of my trading plans is based on swing trading strategy. So for those who want to scalp, want to day trade, so make sure you understand the risk involved in day trading and scalping, right? So this is my view on the Australian dollar paired against the USD, right? If I were you, if I want to make an entry right here, the best zone I would like to place my stop loss would have to be at the extreme high of this 2G candlestick on the day chart, right? So if I'm going to be making an entry based on the 4 hour chart of close, if I can see a strong bearish close of price below this structure right here, if I'm going to make an entry, I could make a short entry right here and then place my stop loss above this high of this 2G candlestick. Now the question is, if I want to target the next potential structure right in this market, will I be able to have the minimum 2 risk to reward ratio in this market? The answer is no. You can see that based on the day chart right here, the next key level structure we got right here, this is the level which acted as a point of support for the bullish momentum breakout we got right here. So if I want to be shorting right here and then having my take profit down, will I have the room to achieve the minimum 2 risk to reward ratio? No, this is 1.69 risk to reward ratio, which is not risk favorable. So this is not risk enticing for me. So this is why I am currently not interested in this trade right here, right? So I have to define the risk. If the risk is not enticing, if it's not favorable for my minimum 2 risk to reward ratio, I will never take that trade, right? But if you want to take this trade as a day trader, then as a day trader or as an intraday trader or as a scalper, this stop loss may be or will be kind of too high for you as a scalper or a day trader, right? Because as a swing trader, I want to place my stop loss at the swing level, right? I want to place my stop loss at the swing level because I know this is a swing level right here. You can see right here we got a swing high right here before price reverse to the downside. So this is another swing high right here before price gonna reverse to the downside. That is if it's happens. So if I want to trade as a swing trader, then the best zone to have my stop loss has to be at the high of this 2G candlestick right here. And if I'm going to target low structure right here, no, I can't have a minimum of 2 risk to reward ratio, right? So because I want to see a bearish close of price below this breach right here. So you can see that if I'm going to take that trade, the risk is not favorable for me. That is almost 1.53. So if you're a day trader, you could find a way to reduce your risk right here, maybe to the high of this 4 hour candlestick right here, so that you can have the minimum 2 risk to reward ratio, right? Good. Those are my thoughts on Australian dollar paired against the USD. Now let's check out the euro paired against the USD. A trader made a request for the euro paired against the USD. And where are you watching from? Beast, please, where is your country? Comment your country. Where are you watching from? Right. So Beast said, what is your thought on euro USD? Let's check out euro USD. What do we have on euro USD right here? I gave the analysis on euro USD right here yesterday, and you can see actually there's a channel on the euro USD. Price broke this upper band of this channel, so the analysis is still active based on what I analyzed yesterday in the live stream. You can see I told you price got a rejection price level at the key level structure of the 1.08437. You can see that right here. So let's get some of these drawings of the chart. So what I'm looking out for is I want to see how price is going to react to this broken rising upper band of this channel right here. Maybe this upper channel is going to act as a dynamic support for the continuation of the upward rally on the Euro USD. So this is my view on the Euro USD. Alternatively, if price should break this upper band structure whereby the bulls fail to defend the structure, then expect more rally to the downside, that is to the lower band of this rising channel, right, or to the key level support at the price of the 1.06357. In summary, let's hope to see how price react to the upper band of this rising channel on the Euro USD, right? So this level right here, the upper band of this channel is going to decide the fate of Euro USD. Maybe the bulls are going to set in, or maybe the bears are going to be willing to pull price more to the downside, right? Great. But based on my personal trading plans, I prefer the GBP paired against the USD to the price actions on the Euro paired against the USD. Now let's check out gold. Gold is next on the list. Let's go through the gold market. All right, do we have gold right here? Here comes the chart of gold, right? So based on what I have on the chart of gold right here, you can see I told you guys, if you want to go for a long entry, you got to be very careful of the upper minus structure we had at the price of the 1,964, which could act as a point of hindrance for buyers in this market. You can see right now it's currently adding as a resistance structure for price. Based on the day chart right here, you can see that. So let's check on the 4-hour chart. Based on the 4-hour chart, this is what we had right here. You can see the price action we got right there is kind of a very choppy. So for now, based on what I can see on the day chart, let's hope price is going to make a pullback to the lower structure at the price of the 1,944, right? So this is my view on the SAU paired against the USD. We have a lower, that is a rising channel on the forward chart. You can see that. So for as long price still trade above this rising trend line on the 4-hour chart, the rally right here is still in the ends of the bulls. But once the price break below this rising trend line on the 4-hour chart, then it signifies the bears are setting into pull price to the support structure, which acts at the price of the 1,946. And the failure for the bulls to defend the structure right here, then expect more downtrend on the price of gold. So in summary, the fate of gold depends on this rising trend line. If this rising trend line acts as a definite support for price, just like what we had on the forward chart, a bullish engulfing bar right here. But this bullish engulfing bar right here is not a kind of a strong bullish engulfing bar right here, right? But based on what I can see right here, when I combine this candlestick we got this structure right here, if I combine all this candlestick we got right here, I can see a type of a confirmation of a bullish Aramic candlestick. Because if I combine all the price actions right here, I can see a setup of a bullish breakout. So let's hope XAU that is good, is going to have a bullish breakout. Failure for the bullish breakout to occur, then expect price to test the lower trend line in this trend, right? This trend line, this lower ascending trend line right here. Okay, so that is my summary on gold, right? So let's go through the USD JPY. USD JPY, what do we have right here on this chart? USD JPY, this is what we have on USD JPY. I told you guys yesterday, as a day trader, you should be looking out to short from resistance and then long from support. So if you are right here and then you are looking out to make a trade entry at the midpoint right here, it means you don't know what you are doing in trading. At this medium right here, you have two options. It's either you are trailing your profits from the bull rally right here, or you are patiently waiting for price to get to resistance to look out for short entry from resistance. So if you are looking out for entry right here, then it means you don't know what you are doing in trading, because at this medium right here, you can see consolidation phase going up right here. So this could be a consolidation for a breakout or a consolidation for a break to the downside. So at this medium right here, if you already initiated a long entry right from the bullish bar right here, then you should trade your profit up to close some profit should in case there's a breakdown to the downside, right? So this is my view on the USD paired against the JPY, you can see what we had on the 1 hour chart. For those of you trade on the 15-minute chart, you can see what we had right here. So at this medium right here, I see no reason you should be executing a long or short entry right here. Right, guys? That is what I have on the USD paired against the JPY. So in summary, as a serious trader, as a trader who knows what he or she is doing in the market, this is not the time for you to execute a long or short position. If you already have a long position, trade your profit. If you want to be looking out for a short entry, wait for price to get to resistance before you short. If you want to be looking for long entry, wait for price to test the lower band of the inner rising channel in this uptrend. Right? Now let's check on euro paired against the Australian dollars. Let's go through that. Euro paired against the AUD, euro paired against the AUD. Euro AUD. Let's check in your other chart right here. Let's check our other charts right here. Okay. Let's check some other charts right here. Let's wait for the chart to open up. Right. Now let's go to the euro paired against the AUD chart right here on right here. This is the chart right here, and let's extend this chart based on the day chart. This is what we have on the day chart. All right. Let's go on so if you are trading the chart of the AUD, this is how your chart should looks like right now. If you are trading the chart of the AUD, now the question is, can we see any trade opportunity right here on AUD? Based on what I can see on the day chart, this is like a kind of a choppy market, a market flowing up and down without a specific direction. You can see that it's just like a ranging median right here. So if you want to be looking out for trade opportunity on euro paired against the AUD, you should be looking out for trade at resistance structure right here or at support structure right here. If you try to trade at this middle point right here, there's a higher chance it's going to blow up your account. You're going to lose your money, right? Never take trade at the middle of the trend if the market is not trending. So as what you can see right here, this is a choppy market. The waves of the market take you up and it takes you down without a specific direction. It takes you up, take you down. So in order to reduce your risk in the market, you look out for points of interest. That's our areas that tend to attract buyers or sellers in the market. Which example right here, we have a resistance structure right here. You can see that. And we got a low structure right here. You can see. So whenever price get to this high swings right here, no resistance structure, it's acted as a resistance, and right here as resistance, and right here support, right here support. So if you want to take this trade right there, you should be looking out for maybe a push into this bearish, reversal candlestick on the day chart for a more short entry, right? So if I were you right now, if you want to take this trade right here based on the push to the downside, you should focus your attention on the 4-hour chart. On the 4-hour chart, we already had a push. There was a push already on the 4-hour chart. So if I were you, if I were looking for a trade opportunity on euro paired against the Australian dollar, I would have gone in right here on the 4-hour chart based on the pin bar structure right here, and I would have loved to place my stop loss at the resistance structure right here and the target the low structure right here for my take profit. Wow, that is nice. 2.4 risk to reward ratio can be achieved. So this is why I would have loved to take this trade right here. So if you still want to get in right here, your risk level has increased more than your profit ratio or your reward ratio right there. So only if you want to have your stop loss at the high of this bearish pin bar, which actually tests the neckline of the double top we had on the 4-hour chart. On the 4-hour chart right here, we had a first top right here, tip 1, we call it top 1, and then we got a second top right here, we call it T2 right here. Can see that, and we got a neckline right here, which is the end neckline, and then we got a pullback to this neckline right here with your bearish pin bar. So you could go short right here. So if you want to go short right here, this is the best way you can have your stop loss as a day trader or as a scalper. You have your entry right here, and then you have your stop loss right here, and then you target all the way down to this support structure right here. So this could give you a minimum of 3.5 risk to reward ratio, right? So this is my personal view, and it's not intended as an investment advice. And then let's look into the market structures in this rally right here. Let's get these drawings off on our chart. Let's get this drawing off right here, and let's get this drawing off right here, and then this off right here. So let's analyze the market structure right here on the euro paired against the AUD on the 4-hour chart. Right from the swing structure right here of the breakout, we fire the trend line all the way down. We fire the trend line from this neckline all the way down. You can see that. So we construct the trend line all the way up right here. So based on what we have on the 4-hour chart, you can see we got a swings of price from this lower low structure right here, LL, and then we got price moving up. We got a high low. You can see that, And then this medium right here, which was the neckline, is a high low. So this is a break of a high low structure. Price retested the high low structure right here, and then what we got right here now is what we tag as a low high swing. So this is a nice, perfectly structured market with a proven breakout of market structure. So for day traders, for scalpers, I think this is a good trade for you. You could be looking for a short entry right here, whereby you place your stop loss at the high of the low high swing, and then you ride a trend all the way down to the lower low swing right here. If you can do this successfully, this would give you a minimum of 3 risk to reward ratio, or 3.6 risk to reward ratio, right? Great. So make sure you manage your risk, because there isn't any trading strategy which is infallible in the market, right? So you guys can suggest any more assets you want us to analyze in the live stream. And then if you're right there on TikTok, if you are here to become a member of my group on the Telegram, make sure you follow the instruction on this whiteboard right now to get access to my Telegram page. If you are watching from YouTube, make sure you check the description of this video to tap on the Telegram link to become a member of the group today, right? Thank you. Now let's go to the Euro pair against the New Zealand. So Euro AUD pair against Euro New Zealand almost have the same market correlation because of the relationship between the Australian dollar and the New Zealand currency pairs. So let's check on the day chart. First thing you got to do right here on the day chart right here, we got a kind of a choppy market right here. This is what we got on the day chart, right? Let's mark the levels we got right here. So right here we got a supply structure right here, and right here we got a potential demand structure, and the structure I got here, we got a resistance structure. Resistance acts as proof right here. This is what it was as resistance structure. So demand, supply, they're actually different from support and resistance structures on the chart, right? So you can see we got a supply structure below a resistance structure, and we got a demand structure above a support structure in the market. You can see that. So sometimes you could call them minor structures in the market. You could refer to demand and supply zone as minor structures in the market, right? So based on what we have on the Euro pair against the New Zealand on the day chart, we got a price bouncing up between a supply and the demand structure. Now let's see what we have on the 4-hour chart. On the 4-hour chart, this is like kind of a rangy medium right here, but we got a series of tops right here, and this could lead to a broadening top. This could lead to a broadening top. We got a first top right here, T1 right here as a first top. We got a second top right here, T2 right here as a second top, and then we got a third top right here as T3 right here as a third top, and then we got a fourth top right here as T4 right here. This is why I call this a potential broadening top, right? When price broke from the high of the T3 right here, the top price gravitated all the way down to this structure right here. That is the price of the 1.7900. So this is psychological level. Wow, I see the reason why it price bounced up from this level. So if you are a trader and you're looking out for a trade entry right here, I think you are trying to take this trade at the middle of the trends, which is late. Never getting right here. If you want to get in right here, then you don't know what you are doing. The only thing you should be doing right here is if you already initiated a short entry right here, you should be looking out to trade your profit to the high structure right here, right? Trade your profit right here, right? So this is what I think you should be doing right here, right? Because if you are to make an entry at this medium right here, and then you place your stop loss right there, the market actually know what you are doing. The market know a lot of traders are going to be willing to short right here, and they have a take profit right there. So the market is going to be willing to test your knowledge and then pull up to cut you out, maybe form a double top before it comes down. And this is why I always advise it's never the best thing to take a trade at the middle of the trend. Or the only thing you can do is to add to your existing trade, scale up by covering up your risk based on the profit you have made, and then or you trade your profit, right? So that is the thing I think you should do on the Euro pair against the New Zealand right here. So this is my view. The best zone to have taking this trade is maybe after a pullback to this structure right there. Then that could be a trade for the day traders or scalpers on the lower time frame, right? That could be a break. Well, anyways, if you are a day trader, you're a scalper, you could exercise your interest right here. But based on my years of experience, I tend not to like the kind of patterns or risk or strategies based on scalping day. Sometimes I day trade. So let's check what we have on the 4-hour chart. Based on the 4-hour chart, let's apply our trend line structure right here. Trend line structure right here, this is what we have. So you could be looking out to take a test of this trend line based on the trend line breakout right here. You could be looking out to take a trend line breakout right. Want to take a trade right here, I think you should get in with a small position size. getting with a small position size, that is the best way to reduce your risk right here, because you are taking the trade at the middle of the trend, which is risky, right? You could have your stop loss right here and the target all the way down to the structure right here, maybe for 3 risk to reward ratio, right? So if you are taking this trade, it means you are taking the break of a trend line structure right here, right? I think this is my view. This is what I can see. If you can apply your Fibonacci from this level all the way to the up right here, it means you are trying to take maybe structure of the benchmark level, retracement level, right? So this is my view on the euro pair against the New Zealand. Since I have other currency pairs that has more fine technical setup, I see no reason why to take on this kind of a very complex and complicated currency pairs, right? So let's check out the New Zealand pair against the switch. New Zealand pair against the switch. What do we have right here? Based on New Zealand pair against the switch, the day chart, nothing right here. The 4-hour chart, this is what we have. Based on the 4-hour chart, I don't like this kind of market right here. It's a kind of a choppy market. No defined resistance structure right here. There's no defined resistance structure right here. Based on New Zealand pair against the switch, what I can see right here is there isn't any defined structure right here. All right, this is what I have right here. No defined structure right here. And based on the weekly chart, we have price just in the downtrend. And based on the 4-hour chart, we have price retesting this rolling in profit. Yes, GBP paired against the AUD. Currently right now, I share this setup with the members in my VIP community. So if you are a day trader, a scalper, this could be a trade setup for you. We are in a not yet a downtrend, but we have a low high swings. Just what we had right here. We got a low high swing right here. We got a low high swing right here. Can see that, and then we got another test, but this is like a kind of a choppy market right here. This is a very, very dirty market right here. It's a very dirty market there. And then let's check the 4-hour chart to see what we have on the 4-hour chart. Based on what we have on the 4-hour chart, I'm gonna check something right here. Check some things right here. Okay, based on what we have on the 4-hour chart, you can see the market structure we got from this structure right here, a lower low structure, high low structure, on the right here, high low structure, on the right here, high low structure. This is a high low structure, right? And we got right here a breakout of this high low structure right here. And after we got the breakout of this structure right here, there's a lot of price actions which I love right here. Price broke this level based on the pin bar structure, and then we got a 4-hour bearish close below this structure once again. This was the first breakout right here. Take note of the first breakout right here. So price closed to push back into this level, but there was another bearish forces which put price downward. So this is why I told traders this could be a trade opportunity right there. I already initiated the short position on this trade based on a different account which I use for back testing, right? I have a different account for back testing. I told you guys I am not a fan of back testing or demo account most of the time, so I just want to backtest this entry right there, but not based on my retrading account, just a segregated account for backtesting different strategies, right? So I already initiated the short entry right here, and then I played my stop loss at the high structure right there. So let's see how this trade is gonna go. If it goes based on my sell limit entry right there, it's gonna be around 2.4 or 2.5 risk to reward ratio. So one of the fastest ways you can learn so fast in the market is have different accounts. You could have like 3 or 4 live accounts, and then you trade on them based on different strategies or rules. And then at the end of the month, at the end of the year, then you find out, you analyze, you make a record which of the strategy which gives you the best results, right? So these are one of the ways you build up strategies. You don't just watch YouTube videos or read trading books or PDF or whatever, and then you start trading the strategies. You don't do that, right? You first need to backtest them personally on a live trading account, because I don't like to trade on a demo account, because based on whenever you trade on a demo account, there isn't any emotional attachment, right? So I like to trade on a live account. Even you can deposit a small amount of money, you can, whenever you lose, it can't affect you financially. So I have different accounts which I deposit, and then I backtest trading strategies. So right here now I'm backtesting this trading strategy. So if the trade should go against my direction, then I have no reason to feel bad, because it's a backtesting setup, right? So not on my rate trading account, right? I will never want to trade this type of setup on my rate portfolio management trading account, right? So this is an account on the money on the backtesting account. So someone said, please, how many pips is your stop loss? I don't count my stop loss based on pips. I told you guys, I don't place my stop loss based on my pain level, based on pips. I don't believe in pips stop loss, counting so amount of pips for stop loss. I don't do that. I don't have a specific pips loss. I place my stop loss based on where the market will prove my analysis to be wrong. If it takes 50 pips for the market to prove me wrong, good. If it takes 100 pips for the market to prove me wrong, good. For as long I can have the minimum 2 risk to reward ratio or above, I'm good. If it's gonna take me 200 pips for the market to prove me wrong, good. Then I reduce my position size. And if I can see a level which is like 400 pips away, good for me, right? So I don't place my stop loss based on pips of 50 or 100 or whatever, and I don't do that. I don't place my stop loss based on cycle level. I place my stop loss based on market structures, invalidation swings of bars, invalidation swings of market structure, liquidity structures. No, these are where I place my stop loss. I don't count pips, maybe 50 or 100 or 20. I don't do that, right? And I also use the Fibonacci retracement tool for my stop loss, right? On this trade, you can analyze right here. If you want to make a trade right here based on the 4-hour retracement, based on this level, from this level right here, if you have your measure from this level right here, the trade should be being executed from this level to this level. That is almost like 67 to 70% pips, right? So I don't count based on pips. So this is almost like 70 pips right here. So that is 70 pips. And as you can see, based on 70 pips, I'm targeting all the way down. So from my entry point, sell limit that has been triggered all the way to this structure right here, that is almost 109. That is almost 200 pips. So I am risking 70 pips for 200 pips, which is reasonable, right? Good. So that is how I take my trade. I don't count my stop loss based on pips. I want to risk 50 pips. If you do that, you are trading based on your pain level. I don't trade based on my emotions. I trade based on what the market will have to tell me. So the reason why I'm placing my stop loss right there is that if the market should make a reversal up to this high, it means this high right there is invalidated. You know, I don't want to see a reason to be going in this type of a market. I see no reason why I'm going to be going that. Maybe the market is going to go up, or maybe the market wants to form a double top. I don't know. So I see no reason why the market should be going up right there, based on what I can see on my forward chart. Because on my forward chart right there, based on what I can see on my forward chart right here, I can see the first breakout of this structure of this higher low swing right there, which is nice with volume. There's volume right there. Whenever I think about breakout, I think about volume. These are previous volumes in this downtrend. These are volumes right there. From the breakout point right here, these were volume, strong bearish momentum, strong volume candlestick, right? There's volume right there, and that was a sharp rejection, which is nice. It retest strategy, and price is closing back below this level with like an evening candlestick. This was the bearish pin bar at a major key resistance structure. This was a resistance structure I constructed from the weekly chart. You can see that based on the weekly chart right here. I have this resistance structure right there. You can see based on the weekly chart, I have a 2 swings high right here. This is the top one right here. The top one was formed on the August of September 2021. And the top two right here, that was on the month of 31st of January 2022. This is a multi-year key level resistance structure. So I fired it to the right hand side, and you can see I already traded the breakout of this rising narrow wedge. This was in the month of September, right? I shared this trading setup with members in my group. You can see that. So this is I'm looking out for the continuation of this narrow rising wedge. So if you don't know what I'm seeing right here, I'm seeing this setup based on the long-term goal. And the reason why I don't want to take this trade on my real portfolio account is based on the ranging medium I can see right here. I don't want to get into a ranging market on my portfolio account. I want to see a very clear, defined trending market. So this is why I have to initiate this trade on my backtesting account, right? So this could be the continuation for this breakout of this narrow rising wedge we got right here. It's a narrow wedge, a breakout volume. So price is going through a ranging medium right here. Anything could happen in a ranging medium. It could be a break to the upside or a break to the downside. And based on the day chart right here, let's get all these writings all the way right here. Let's get all this right here. So we get all these things right up right here. So you guys can see what I'm trying to say right here. Okay, let's get all this class chart very clean. Get all these writings up the chart right here. So based on what I can see right here, you can see I got a break of this major structure. So if you don't see what I'm seeing on the time frame, you're not gonna know price is bouncing at a major structure. Because I went to the weekly chart, I was able to see a major structure, You can see that I was able to track this highs right here from the higher structure. I went to the monthly chart. I went to the highest mountain. I went to the highest mountain so I can see the wide coverage of view. You can see that? So this is why I can see, wow, this is a resistance structure right on the higher time frame. And then the month of October got a resistance from this structure. You can see the bar of month of October. This is this single bar that formed on the month of October. So it was a resistance for price on the month of October. So definitely right now it's still acting as a resistance for price in the month of November. So this is why I see and I decided that wow, this could be a strong resistance structure still holding for price. And on the weekly chart, I can see it as a ranging right here. And then on the day chart, I can see build up of price actions. On Tuesday, there was a strong bearish reversal candlestick, and then on Wednesday, a strong volume bearish candlestick. And then right now, I'm trying to take the pullback of yesterday strong bearish candlestick. So I'm making a pullback entry, a risk strategy of this yesterday strong bearish forces. You can see that. And then I went to the lower time frame. I saw the destruction of market structure. The destruction of market structure occurred at this structure right there. This was the destruction of market structure right here. So I went at this nice sell limit entry order. So this is why I got in right here. Okay. So it's so simple, but it may sound so complex for you beginners. But as you keep on trading, you get to know more things. Once you have a more screen exposure, you get to grab more things. And then that is only if you keep record of your trading activities. So I kept a lot of trading activities. So whenever I see a chart on my screen, I easily grab and recall. Wow, this is a setup I've done like a month or years ago. Okay. I can repeat this strategy, So because I keep record. So during my free time, my weekends, my vacation, I go through my record on my drive, on my Google Drive. I go through them, I view them, I study them, I analyze them, and I recall my memory. So that's the fastest way you can learn, right? So guys, thank you for the attendance to the live stream. If you like this live stream, make sure you follow my YouTube page and subscribe for more, and then join my Telegram group, link in the description of this video on YouTube. And then if you are watching from TikTok, follow the instruction right here on the whiteboard, and then gain access to my Telegram group, right? Thank you guys. So gotta go right now. Gotta hit the gym, right? Good. I gotta lift some bars. Yeah, so I'm gonna be right here today, 9 p.m. GMT +1. So make sure you keep your alarm, and then make sure you're in the Telegram group so that you can get my notification whenever I go live. Thank you. Goodbye. Peace. Good afternoon, good morning, and good evening, wherever you are in any part of the world. Someone said, are you going to trade news? Well, based on my technicalities right here, I can't see any setup that corresponds. No, I can't see. Actually, I haven't checked the news today. That is so bad of me. And that is the type of trader I am. I don't usually check news, because whenever I check news, it usually tends to disrupt my technical plans. I don't like anything that's tend to disrupt my plans, right? So I haven't checked the news, but based on my technicality, I trust my brokerage firm. Whenever there's a volatility in the market, my stop loss doesn't go above what I set. So I trust my brokerage firm. I've been trading with my brokerage firm for years, and they have never disappointed me. And then as well, I manage my risk. So there isn't any trade that can blow up my account. So I manage my risk. So if the market should go up, that is why I have stop loss, and I trust my brokerage firm. So my brokerage firm has never for once disappointed me. So that is why I don't so much focus on news. The only news I focus my attention is on interest rate. So that is the only news I always focus my attention on. And then sometimes I could just glance through the forex factory. So let's just go to the forex factory and see what we have right here. Let's go to the forex factory and see what we have right here, for those of you who like to view the news, because during my trading activities, I don't like focusing my attention on news. News tends to disrupt my plans, right? So it tends to weaken my morale, my confidence in my technical. So that's why I don't want anything that can interact or interfere with my technical plans, right? So today we're gonna have employment change. Good. What was the previous? The previous was this is based. Let's check it out right here. We already have the Australian dollar right here. I haven't checked this news today. Of course, the employment change for Australia was great. And I'm currently shorting GBP paired against the AUD, which means my technicality is conforming to the fundamentals. You can see why I stated I don't check news, because based on my years of experience in trading, I tend to understand that if you are good in your technicals, you will have a pictorial image or an idea of what the news is going to yield. You're going to have an idea of the point of or the result of fundamentals, because most of the time technical would already have set up based on what fundamental is going to tell you in the market. You can see right now, I've never, to be sincere with you guys, I've never checked on Forex Factory for news today, and I already took the trade on GBP against the AUD. And you can see the employment change on AUD was nice, 55k, and the unemployment rate is 37, right? Which is great. It means right here, the previous right here is 7.8k, which means employment right here. People were employed in the economy of Australia were 7.8k, and that was the previous, and the forecast was 22, and there was a surprise in the actual, which means extra 55,000 got employment, which is higher than the previous and the forecast. So this is a great news for the Australian economy. You can see right here, it means the economy is doing okay. There's a lot of employment, and the unemployment right here means the number of people we are unable to employ. So when it is lesser, it is good for the economy. When it is higher, it is not good. It means the number of those who are unemployed, if it is lower, it means there's a lot of employment. But if it is higher, it means a lot of people are unemployed. So right here, the previous was 3.6, which means 3.6% do not have employment. The forecast was 3.7, which is slightly 0.1 difference, and the result was 3.7, which means there isn't surprise right there. So this is how you decode fundamental factors in the market. This is how you decode fundamentals right there. This is how you analyze fundamental factors, ratios, right? So what we got right here is positive for Australian economy, and this is why you see most currency pairs against the Australian are just weak, because the fundamentals is so strong and the technical is strong. And whenever you find the fundamental and the technical are all in the same direction, that currency tends to move. But take note, there isn't any guarantee in trading, right? And another website I like to check out is the Forex market cap. I have this tool on my website, and you can as well use the other website right here. As you can see right here, we still have currently right now the market sentiment is Australian is weak, New Zealand is weak. I told you guys, wherever Australian dollar is moving, New Zealand tend to follow Australian dollar, and wherever the New Zealand is going, Australian tend to follow them. They're just like a twins brothers. They're so much like themselves, they followed each other, right? So these currency pairs like themselves to the point that they follow one another, right? So that is why whatever you are doing on Australian dollar, you have to just replicate the same thing on New Zealand. And this is why I always tell traders, if you want to trade AUD paired against the New Zealand, that means you don't know what you are doing, right? So never trade AUD paired against New Zealand. So I see traders sometimes they try to trade AUD paired against the New Zealand. That means just traders don't know what they are doing. So I got to go to eat the gym. No, I work based on time. I got to go right now. So see you guys in the evening. So that is my view on fundamentals. And then other fundamentals we got today, I think we have the USD employment claims, whatever, USD Philip Fed manufacturing index, the industrial production MI. Let's see how it's gonna come. I have a stop loss in the market. I have no reason to be scared. That's why my stop loss is right there. If the market should hit my stop loss, no problem. Okay, that is part of trading. You have to learn to lose right and how to win right, and know when you win, know why you win a trade, and know why you lose a trade. Profit and losses are break even are what make trading to be interesting. So as a trader, you have to be ready for any side of the coin. Thank you guys. Have a wonderful day. Peace.